Hello, Warriors. Let's have a great week, holiday session. How's everyone doing today?
Morning, Dale.
Hey, Ryan, how are you, buddy?
Good, mate. You have a good
Hey,
weekend?
came in. Yeah, I had a nice weekend. We got Sinatra here and Wesley and Shahab. Good morning to you guys. And yeah, good weekend. Looks like everything happened in Asia because we're closed here, right? In the States.
Yeah.
Okay.
Yeah.
So before we get to the currencies, I just wanted to show one chart. And Europe must have been strong, and Asia must have been strong because this happened at night, and I think because we had a bad tick. They showed it closing like at 36.38. Anyway, I had this line drawn for a while, and Blake talked about the divergences that we're having, definitely glaring ones, right? From in this period to this period and turning up. And I think we're going to have a summer rally. The first day of summer is tomorrow. We have two drives down here. There's one. Here's two. I can't rule out one more. But I think we're going to have a nice summer rally, and we can make a run, I think, this summer to test 4,200. It's going to be an important area, as it has been for all year, back towards here. And I think that what's behind it is what happened last week in the oil. It got cracked pretty good. Is it going to hold here? Or are we on the verge of rolling over? So, I mean, the action, this candle was pretty negative. So I'm not saying we can't rally, but it looks to me like we're going to work, that oil's coming down. And no one wants to make the call. Huh?
Bit of a sharp one, that one, wasn't it?
Yeah, that was like a $7 down day.
Yeah.
$10 down day right here at the end of the week. And, it's holding, but there was some pretty good volume. So I also heard it's not just Biden's trip, that rig counts are going up again. Anyway, I think there might be some good news. This would be good news. And then when you look at what the 10-year did the day of the hike, and it put in a real ugly candle. And I know we're at support right here, but that looks like it could be a top. And the bonds, decent follow through. Looks like we could be putting in a bottom there. So the only missing thing to really have complete risk on, in my view, is a turn in the dollar, which I don't think we're there yet. I think we could get another high in here, but this could be a 1, 2, 3. I think we're going to trade over 106, maybe go 107 in the coming days, and that'll be the acid test for the metals to see how they hold should the dollar make one more high. That's my view of the board.
Good view as always.
Thank you, buddy. I just think they're going to go for these stops under 103.40, and there's got to be at least, I don't know, one or two stops under that low that the algos want to go pick off. Probably thousands of stops under these lows. So that's where everyone's stop is, right? I mean, right? Yeah, if you're bottom picking euro here, where you're wrong, and they're all going to say, under 132.40. So, I maybe we just go to 102.40 and then we're back over 340. Anyway, this looks set up for a stop hunt type of, capitulation. Be making, and the headline, Ryan, would be like a new 21-year lows, right? Because that low on the monthly way back then was 2018. And that was like a 20-year low. So, we'll be hearing that kind of stuff.
And parity.
Yeah, well, and it won't get to parity, I don't think. So, I don't know, your view on this comeback rally, because Kuroda did nothing. this will be the first time that we will not. We haven't done it yet, have we? We haven't made new highs, but we're not going to confirm this time. And I don't know. I think yields are saying something, and this was just all central bank disappointment. But I still believe in the correlation.
Yeah.
So that's it. That's all I got.
It's a bit detached, the correlation. They keep jumping around. You would have thought perhaps dollar yen might have been a bit lower on oil moving lower, but it's it's still hovering around 135.
Yeah.
So is it back on the yield bus? Is it back on the getting a lot of this? You would have thought dollar CAD might have been higher with the oil crumbling, but it's not. So I think we just this is the hangover day from last week's central bank stuff. Obviously, the US shut. I'd be a little bit cautious. Maybe getting sucked into something like oil. You think it might be. Is it going to go lower? It's not the day to perhaps guess that. The bounce looks a bit tepid at the moment. The fact that it's holding that low, yesterday's low, today, might be significant. Certainly on the intraday price action, you got to think, well, that's the marker. If the market's had that big move lower, $7 lower, and we can't break the Friday low, that's where the line's being drawn. That's your marker for tomorrow, perhaps.
Yeah, and I mean, since it's a slow day, we could go around a few of these things. But copper, I remember, I forgot who I was talking to, but basically you said, look at the weekly, and you have a range from 4 to 5, and we're threatening a breakdown. So it almost looks like if crude breaks, if copper breaks, used car prices come down, they're not going to be able to do anything about agricultural commodities. But
if
but if it does happen, they'll look like they have some short-term success, the Fed, so that they successfully already have tightened us into a recession.
Yeah, and in the meanwhile, if it doesn't, you trade the range.
Yeah. So I don't know. What are your thoughts today, Kay?
Yeah. Well,
that's your nickname. I'm giving you a nickname for your nickname.
You can do it.
All right, Kay.
Anyone with less experience than Dale, it's a no-go, but Dale can do it.
Oh, well, there are many brontosauruses around in the market anymore, so
that's why I'm not taking too many chances.
All right. So
no, you showed exactly the right couple of pictures. The copper, the oil, the 10-year dollar chart. They're all on levels where, if it holds, yen is likely to go. Continue weakening another leg and go for a Bank of Japan, or rather MOF test, and we might see this thing go to 137 or 137, 38, perhaps closer to 140. But if all of those break, if the 10-year softens back to 3% already, just for a change, if oil goes back to sub 105, if the commodities suffer a bit, then we could actually see a period of a bit of a stronger yen. Of course, the marker will be this 135.5 on the dollar yen. I'm not sure that if the dollar is dead yet, but on the yen side, I'm still very cautious. I still like to rather sell yen rallies right now, because the Bank of Japan just gave the green light that the interest rate differentials are here to stay for a while longer. So, but we have to look at the other markets. If data tell us that we are slipping into a recession and the rest breaks lower, that could be a tailwind for the yen for a while.
Right.
And in the meantime, Kuroda was out this morning that he spoke to Kishida that they are keeping an eye on the yen, so he's keeping the market on its toes. I'd rather trade it sideways, still with a weaker yen bias for now, because I have to say something. I spoke end of last week with a mate of mine in Japan, in the industry, and as for levels are concerned, but everything is about speed. But as for levels are concerned, it looks as if Kuroda is not really hot for the intervention before 140, 145. But who will tell us exactly when and where is the red line, right?
Right. Okay.
The other thing that I would like to mention is that we have an introductory statement out by Mrs. Lagarde from the ECB in about an hour's time. There should be a text made available. So usually what she does is just repeat what the ECB statement was. But if she would ever change a bit the wording, that she might be open to more than a 25 BP hike in July. The guidance is for a 25 BP hike in July and then an open door for what's coming later. But if she would give a bit of leave the door open for July for a higher rate hike in this text, which I don't think, but everything's possible. There's always a small percentage of possibility. Then we could have a bit of a busy afternoon and a tricky afternoon, especially with less liquidity, since the states are mostly closed, right?
Okay.
Yeah.
All right. Good morning, Stella. Are you around or are you on a
Hello, sir. Hello, everybody. How are you?
How you doing? So
I'm very good. I'm very good.
So any impressions on this watching the paint dry kind of day?
Yeah, I mean, we always knew it was going to be a quiet day. What today gives us is a kind of idea which way the U.S. traders, let's say the U.S. Market participants are leaning towards, and we're seeing the U.S. closed and European markets rally. So I'm guessing that tomorrow when we open, it's going to be a different story, and we're going to see probably a reversal of today's move. But either way, it's a quiet day. I wouldn't pay too much attention to price movement today, but obviously this is the market we have. This is the market we trade. So it seems to be risk on today. Cryptos are bouncing off the weekend lows. I was checking the feeds over the weekend, and I think
down
Bitcoin
to 18.
Yeah, Bitcoin hit 18. Ethereum 9 something. It didn't look good, but it's the bounce is always going to happen at some point. I still think we should be selling rallies in all risk assets because, in my opinion, nothing has changed. I know I sound like a broken record, and I'm sure I'm boring a lot of people out there, but central banks are hiking. We have Norges Bank this week, I think. And they're expected to hike, and I think they're probably going to be surprising to the hawkish side. I mean, the S&P did. Why wouldn't they do? And and
I've heard other people say that was the most important event in FX last week. That the Swiss did that. That the fact that they would do that says that it's going to create pressure. Continual pressure on other central banks to keep raising rates.
Yeah, I mean, if you look at it bluntly, having rates at -0.75%, even with Switzerland, where inflation is 3%, 2.5%, 3%, it's just madness. So it was kind of expected, but I have to say it surprised me. I didn't expect the 50. But you're right. I think it was the important event in terms of FX last week, and central banks are hiking. They continue to hike, and I think the surprise is still going to be towards the hawkish side, like it or not. This inflation is not happening because, hey, everything's great in the world and we're all trying to buy as much stuff as we can. No, it's not. But it's still inflation, and central banks have a mandate, and they have to theoretically keep it, or follow it. So they're hiking. Inflation is going higher. Rates are going higher. Mortgage rates are going higher. Spending is going to slow. It's already slowing, and spending and risk assets and asset values in general of everything they're going to go lower. But at the moment, the central banks are going at it full speed ahead. So I don't see why I would want to be bullish anything at the moment.
Okay.
Sorry to be so blunt, but that's just the way I feel.
But the dollar and still bullish. Do you think we're going to go for these lows here still?
Yeah, we could do it. It depends on the ECB at this point because we're pricing. I know the Fed could still surprise to the hawkish side, but now we're pricing quite aggressively. More another 75 and 50 is coming, and in my opinion, it's going to be difficult to see the Fed over delivering. Although I don't exclude it, but I think this is going to be driven now by the ECB and by the amount of hawkishness that they are going to give us, and. I still think, yes, there is a chance we're going to test those lows, but I still think this is a period now where accumulating longs in this pair should be the right thing to do. That's what I'm looking to do, and I just like the risk reward, and where you're wrong, right? Below those lows, you get out of everything, and you admit defeat.
Yeah. Unless it's just a tactic to take it out, and that's it. It could be. If it's down here and it's taking out these lows, pay close attention to if it's only 100 pip follow through, and then you're back above this level. That could be an important market clue bottom if that happens that way. So
could be.
Yeah. Blake, good morning. Did it cool off last night?
Hey, good morning. Did it cool off?
Yeah.
Whoa,
like 80 or 70?
I don't know. It was actually kind of a nice weekend, but I played golf for Father's Day. So,
oh my gosh.
Yeah, it was. I'm fried. My neck and my arms are burnt. It's pretty rough. So, did everybody have a good Father's Day? I mean, that celebrates. Hopefully, you all did. Yeah, it was a good weekend. It was a good weekend.
Good.
Yeah, it was nice. So here we are on Juneteenth, by the way, and I know there's a lot of people that are out for this holiday. But banks are closed, so it's probably going to be a fairly slow North American session. But we've seen the dollar continue to weaken, and you see the dollar index. After that false breakout that we saw last week, it's just kind of pulling back a little bit, but just meandering. I don't know how much movement we're going to get today. Yeah, so I'm just kind of waiting to see if there's going to be any type of activity in North America. What do you guys think, you Europeans? What are you thinking today?
What time's the pub open?
They already told us.
Already out the door.
Huh?
Yeah.
What?
Already out the door.
Everyone has already said
you guys
everything they probably have to say about the markets right now. Blake?
Yeah, no, but I mean, what are you guys going to be? Are you guys going to be buttoning up early today? Is that I don't even know why I'm here, to be honest.
Now there's a relevant question.
Yeah.
What's that? Why am I even here?
Why are we?
Why are we here? No,
who are we? What is life? What are we? What's it all about, Alfie?
What is life about? No, Ryan, Kman, Stelios, are you guys sticking around today? Keeping us company, or am I the only one that's like, gonna be in the?
I'm here.
I know the chat rooms are actually
look,
pretty
Steve.
big.
Oh, I forgot. See, so their next man up is Steve Volge. So, Steve, what are you thinking coming into this week?
I think that there is absolutely no reason to look for a change of theme, right? I don't see anything potentially different, so I don't see any reason why we should expect, other than the markets possibly taking some kind of a breather, some kind of a big change in relations with what we've seen happening during the past few weeks.
Yeah.
So more or less, I would expect to see a continuation in risk assets to the downside, unless the markets decide, to consolidate a little bit the recent losses, and potentially also dollar holding up all right.
Yeah. Okay.
Well, what do you guys think about this Bitcoin move? Because we hit the 127% extension. Yeah. Hit the 18,000 level basically, and then we bounced back. I mean, do you guys buy Bitcoin here? Is this the time that you want to be long?
Already more sold my house, and I'm in the market for Bitcoin as we speak.
Anybody else?
I'm still waiting for my level, a buck in front of Kman at 31.
At $31, you're going to be long at $31.
Yeah.
All
We're
right.
getting there slowly.
You're too bearish. I would gladly buy at $100.
Another one.
The thing about the push below 20,000 is I actually think it was enough to shake out a lot of people to get us to bounce again.
Did you read the news about Michael Saylor going bankrupt?
No.
Oh, really?
Okay, then it's not enough.
Oh, okay. I hear what you're saying.
It's the simplest indicator.
I don't know. I still think I think we'll still see 25,000 first, and then
not impossible, not impossible. But I do think that any rally will be sold again. Now, is it going to be in a couple of days? Is it going to take a little bit longer for the market to correct higher? We need to give it a little bit more time to see, the kind of technical formation it's going to be forming. But one thing I'm pretty sure about, the chances that we've actually seen the low during the weekend, in my opinion, the chances are low.
No, I agree with that.
What was the driver? Was it that Solana news?
You mean the Celsius news?
No, the Solana. They not Solana itself, but something that I don't know exactly the lending part of it. They put a restriction in on a big whale that would have to have got liquidated under a certain level, and the price went under that level. So they basically put an order in to take control of that whale's account to minimize the effect of being liquidated.
Yeah, I mean, I don't know. Michael's just saying they locked up their largest holders or something like that. But that probably was the catalyst. And, the price action was just bearish. I mean, as I pointed out, like in the week ahead video, there just wasn't, it wasn't even bouncing. And I don't know if I'd really even look at today's price and say that that's really bullish. I just don't think that there's a whole lot of interest here. And I don't know what the catalyst was, to be frank, Ryan, nor do I really care, other than the fact that we did hit a nice technical level. And one of the things that we've learned about Bitcoin and cryptos over the last several years, I would say, is technically they're very obedient. There's not a whole lot of algos that are in this market to really screw up the technical pictures of cryptos. So I like them in that respect, but I still think that you have to sell rallies here. Anyway, that's just my period. So
you're just copying what I say, but yeah, I agree.
Yeah, exactly. Whatever Stelio said, I agree. And let me say it again to waste a little bit more time this morning. So, one of the things I guess I wanted to point out is, the S&P, a lot like Bitcoin, still trading really heavy here, but we had, maybe some channel support. Dale, I heard you say that you think that we're going to rally going into summer.
I think we could have a summer rally.
Yeah, I don't disagree. But on what would be the reasoning behind it, other than we're just too
lower oil prices, yields having peaked for a while, eventually the dollar turning.
So and gas prices here are still really high.
But if you take a look at the natural gas chart daily, no one's talking about the big break there. That led it, and last week that hit that crude took of $7. So that's a pretty good sell, a pretty impulsive a breakdown. And last week in WTI, that was a pretty good hit as well. It's still a very one-sided market. I could understand it,
But by the way, Dale, that's not so accurate. We've been covering natural gas daily on the morning edge.
Oh well, I'm just saying.
I know you don't know. That's why I'm saying.
Yeah. In general,
we've
Twitter,
had a target. We've had a target since the breakdown of an ascending wedge. We've had a target at 645, and we're now getting very, very close to that.
Yeah. So this looks like a failing rally too, or at
For
least
crude?
could be.
Yes. Yes.
Yeah, I mean we're at channel support, so
Yeah.
it's probably like do or die for crude here.
So that's good news,
all
isn't
hope
it? I
that
mean,
dies.
that's what gas prices will come down or just on the parachute at the best.
Yeah,
Because
assuming
it's
that's
refining.
yes, assuming that's the case, though, Dale, you need to remember that unfortunately, gas prices are not the only element in the mix that is actually creating all this negativity in the markets, right? It is an important element, but definitely not the only element. And
Oh yeah,
if for example,
food
crude oil
prices.
deflates because of a recession,
Yeah,
there
that is
is
why.
there is the recession impact on risk assets, etc. It's going to be much more important than the positive influence of crude oil, for example, moving somewhat lower, right?
I don't know. I mean, it takes the market's most worried about interest rates. If it takes off some pressure on the interest rate market, I think it's important. And most people are saying, energy led this crisis. I know that they can't do anything about
Yeah,
agricultural commodities.
the thing though is that a crisis can develop and evolve in something that looks different, right? So
Yeah,
yes, the
I think
catalyst
tech outweighs oil in the market as far as issues.
substantially,
Yeah, and
it
so and
outweighs
tech
substantially.
wants
Yes.
lower rates, and if we get lower rates, we're going to have a market rally.
Yeah, but keep in mind that tech, the way we've had tech for many, many years,
Yeah,
also what desperately needs is a lot of liquidity that is willing to bet on growth stories and not actual income generated, right? And during a recession or a period of high financial turmoil, even if rates move lower, that capital is not going to be available for companies like this with these type of characteristics.
yeah. All I know is Blake's talking about we've never had a face ripping rally, and for the first time in many, many weeks, there are some conditions in outside markets that could be the match that lights it up.
And I'd love to see yields come down. I think if yields came down, that would actually help the market quite a bit. And you're right, Dale. We haven't seen any rip your face off rally in equities, but we could get it here. I mean, the S&P's look at the relative strength, very divergent. Yeah. Like I said, channel support overall. I still think that the head and shoulder pattern's still playing out, but boy, couldn't we just rip up here towards 43, 40, 4,200, yeah. 4,300. I know you said 4,200, but even the channel resistance would take us to 4,300. And that would hurt a lot of people, it would hurt a lot of people on the short side. And
they're killing longs and shorts in this market.
Oh yeah, absolutely.
Everyone's
going to take us right back to the 200-day moving average. I don't see this as not doable. I think it's very doable. Ride the Curve asks, hey Blake, how about opening the morning edge to all today? What say you? I say take a $1 trial and jump in the morning edge.
Yeah,
I'm sorry, it is specifically for ForexAnalytix subscribers only, and that is my special time with my special people. You guys are all special, but they are extra special. From is kind of special too, but
open your wallet and let
my mother kept telling me,
hey, ride the curve. I've gotten some stuff heard from
he's
some things about
he's
you.
a little
all right, anyway, ride the curve, open your wallet and let the moths fly away.
Look,
let them out of there already.
Let me take a moment and let me just say this. We have developers, we have people that are in the ForexAnalytix team, and I don't know any other analysis company that actually offers you guys a mobile app with push notifications, the ability to have a chat room that's only exclusive to ForexAnalytix subscribers, that you don't get sold anything, you don't get you don't talk about politics or religion. It's just like a really holistic trading and market community. and we charge $120 a month for that, and you get the platform with all these tools and all this extra stuff. Look, try it out, and if you like it, great. And then you get exclusive trading shows from us. But like I said, ride the curve, come hang out with us. I do want to say, you guys make sure you stick around, but because Mr. DaCosta is here.
Oh, he texted me. He thought the day was going to be Friday anyway, so I'm trying to arrange it.
Oh, that's a bummer. He's you guys need to listen to Pedro because he's awesome.
He'll be here Friday. I'm trying to arrange it for Friday.
He's always that reporter that asks all the right questions and
exactly.
Like he always will ask Powell the right question. Like he'll step all over Steve Leisman all day long.
Well, Jamie McGeever from Reuters.
Jamie McGeever is awesome.
He told me, he asked me to let him know when Pedro was going to be on. So
I'd love to have those two guys on at the same time, because they sit in the press box together and they probably shoot the crap all the time. You know what I mean?
Yeah, he wants to hear what he's thinking. So
yeah.
All right.
Well, hey guys, I want to say it's a holiday today. It's probably going to be relatively slow, but I'm gonna say something that I think that I want you guys to.
Dale, Pedro just wrote on the chat.
What?
He says he's here.
Oh,
there you go.
Hey, look at that. Hey, but before Pedro takes over, let me give you guys a freebie really quick. Keep an eye on these commodity currencies. Take a look. Keep an eye on the Aussie. Keep an eye on the Kiwi. The Aussie. I mean, the both of them have created either false breakdowns here, higher lows, and if risk does recover, like let's say the S&P heads back towards 30, or let's say the 200-day moving average around 4,200, the Aussie dollar is probably going to be the same thing, moving back above the 200-day moving average, close to 74-75 cents. I've been building longs in these, and so there's your freebie there. Ride the curve. All right, I want to thank everybody for being here today. I know on this holiday, Juneteenth holiday, for those of you that are celebrating, hope you enjoy a great Juneteenth holiday. And Dale, why don't you take over with Pedro since he's here?
Hey, Pedro.
Hey, Dale. How are you? Sorry for the
confusion. I'm doing great.
Sorry for the mix-up. I figured since I could do audio only, I could jump on for a while.
Oh, cool. So, all right. And I'll move around a few markets, but why don't we start off with the elephant? And what do you think about Jerome Powell's statement? And do you think he's giving good advice to tell millennials not to buy a house that they can't buy anyway?
Well, I think what's amazing about Powell's statement, I mean, what's amazing about the action that we've seen thus far is that we've had four Fed meetings so far this year, and they've moved by 4 different magnitudes at each meeting. And I find that really incredible as somebody who's covered the central bank for 20 years and a central bank that's tried its hardest to be predictable. I think it shows you the level of uncertainty that they're grappling with right now.
Yeah.
Also, the last minute pivot through media leaks was kind of
you mean
a
the
throwback
trial balloon?
Yeah, it was a throwback to past practice. I wouldn't even say it was a trial balloon. I mean, it was kind of a done deal once it was out there. It was, it was framed as such. And that, I guess one of the positive ways that people framed that was that he exchanged his forward guidance credibility for his inflation fighting credibility, and in terms of trying to get ahead of the curve because he'd seen a bad number. So that might be the case. He's a pragmatist, but it's very hard to see what path they take from here that doesn't crash the markets or the economy, basically.
Well, let's talk a little bit about the market reaction to it. So it's one thing what he does, and a lot of people do believe he's being led by the market, but look at the 10-year reaction from it. So we had this we were here before the meeting, and that was a pretty big reversal day that we had, where yields came down. The movement was fairly impulsive. What's the market saying with that reaction, that they want to start pricing in recession now. The bonds look like they might be forming some type of low here. It looks like, at least short-term rates did peak. Whether or not something develops from here, I think it will. I'm wondering what's the market's reaction and what's the market saying about Fed policy now?
I mean, the first order of business is that the market's just saying that it has no clue where it's headed, in the sense that the volatility is just enormous, right? Also, in terms of a market management, you could argue that part of the reason for leaking the 75 basis point news was to manage the market's reaction, and that was the goal. That was a complete failure, because it actually led to a double sell-off, right? The sell-off that, and I'm talking about equities here, but the sell-off that followed the original news, and then people, kind of bought the news and then sold hard the next day again.
Yeah.
So I think you're right. I think the market is pricing in a chance of a decent chance of a recession. The debate has actually has shifted from soft landing to recession to shallow recession versus a deep recession, I think. And I think that's where more the market's questions lie at the point. I don't know very many kind of market economists that haven't built in some kind of recession expectation for next year. It's a question of, time and depth.
And it is possible we had some type of break, pretty substantial break in crude oil. What if we have a break in crude oil going into, the next couple meetings? Could he say that, we're not going to ease, but we're going to watch and see what happens? Natural gas, I mean, some of the real villains in the inflation fight. I'm not saying if oil comes down that gasoline's going to come down commensurately, but shouldn't that be a help and almost give him a little credibility? Say we take oil to $80, and that would take a lot of interest rate heat off him.
It would partly, Dale, but the problem is that the other components are actually more persistent, and they're likely to hang around for a while. So even if there's some kind of inflation easing later in the year, moderation, the next couple of months are unlikely to pick it up even, right? And so by the time they get to the July meeting, it's unlikely to shift from the baseline of 75. And then, do we have enough time by September to know whether inflation is actually seriously easing? One of the components that I've written about is you're just starting to see the housing price surge effects into owner's equivalent rent. That happens with like a 9 to 12 month lag. So the CPI, the shelter component of the CPI is getting really hot and unlikely to abate. And also he'll have a hard time making the pitch that, as someone who's supposed to be looking through, energy prices, that he can make that decision to stop hiking on energy prices alone, right?
Great point.
And so I don't think he can just hang his hat on a potentially temporary decline in the price of oil in order, like, they needed to see it broad based, and that's going to take a while.
All right. Can we switch gears and talk a little bit about his speech? Or address that he made, and he brought up currency.
Absolutely.
That I think is undercovered. Tell us, tell the viewers, what he said and what your thoughts are about that.
It was a pre-scheduled. Absolutely, it was a pre-scheduled. He was participating in a dollar conference. I forget who the sponsor was, but he was basically saying that the dollar's strength is the dollar's stability depends on price stability, and he didn't give us much hint of policy really, but that was my sense, is that basically the Fed's responsible for the dollar's, that he didn't say it like that, but basically the Fed is the steward of the dollar's status as a global reserve currency, in part by maintaining the stability of the price level.
Okay, because normally,
what did you make of it?
Well, normally, you hear of the Fed usually says, well, the dollar is Treasury's department.
That's right. It was kind of an amazing, it was kind of a weird shift. So what did you make of it as a Forex guy?
that he's setting up maybe a reasons. I think the dollar will be a great sacrificial lamb for the Fed. I think it would help exports. Might be easier to sell debt, and makes it easier to service debt with cheaper dollars too. So,
but do you think that, because my colleague Tim Cooper made the very good point that at least in the recent months, the Fed has this sort of implicit, unspoken strong dollar policy in the sense that it wants to tighten financial conditions, and the strong dollar is part of that mix.
Okay, then it's another unplanned event. So maybe it's what the Fed wants, but the rest of the world, sure, after that action of freezing assets, Russian assets, probably they don't feel as secure in the system. And I think China's making moves to sell oil in yuan. They already have their Shanghai exchange. I think that was cross the Rubicon moment for the dollar.
Absolutely.
Don't you? I mean, say you were a nation and you didn't know the presidents change every 4 years, and your policy may not be completely in line. To have all of your assets frozen, that's pretty high risk.
It is, although you could argue it's a pretty unique case, right? I mean, Russia went out of its way to to start a war against the European ally, and so I mean, I think that's the reason why we haven't seen a kind of bigger market reaction and a bigger move away from the dollar. It's a lack of alternatives, at least in the short run. Yeah. But I think I don't think people think this is going to be kind of top of the toolkit kind of move for international relations. But your point is well taken. If one president does it, the precedent, and they might use it in a different way. So,
well, look, Trudeau used it for another purpose. Those truckers that were out there had their accounts frozen.
That's right.
So, anyway, everyone get a real big mattress and stuff it in there. So, do you think that Powell is going to be able to engineer, what he hopes to be a moderately safe landing from this cycle?
I have a hard time seeing it, especially because of kind of historical patterns as to how the job market behaves. Yeah. And the way that they see the soft landing scenario, it almost has to be this perfectly styled pirouette where they, they land on a single toe. Yeah, it's like a ballet.
Like the maestro.
Exactly. And so, and what's interesting about the way that they're talking about it is they're almost saying like they can tighten conditions enough so that employers will post fewer vacancies, but not fire people. And I think that we've never seen that happen. And also, I find it very strange how much weight the FOMC has started to put. This is actually almost Greenspanian. You mentioned the maestro. And I think that a couple of the things that Powell is doing have reminded me of Greenspanian times. One is this last minute pivot almost reminds me of constructive ambiguity, which is the Greenspan philosophy of I can say things and you might understand what I'm saying or you might not.
Yeah.
And the other part of it is it's basically that leading the market idea that also is a Greenspanian kind of concept. So maybe we're back to those days.
Okay. So I guess that we're just going to have to see, and you would think that whatever he's doing now really doesn't really filter through for 6 or 12 months.
That's the thing,
right?
A
lag time between policy and its effect on the economy.
That is how at least the theory of monetary policy works. And if that's then I guess we'll get the peak effects of this monetary tightening. And the idea, of course, was to front load it because the economy is strong, and so to do it while the economy could take it, sort of thing.
Right.
But because of the lag, it could be that the heaviest dose of tightening will be delivered just as the economy is crumbling potentially later in this year.
So where would I find if I wanted to come when I come to MNI, where do I find your columns?
Absolutely. You just go to policy there, where you just were scrolling, and then you click and you go to the right to the Fed there, and everything that's under the Fed banner is written by either me or the rest of my team.
Okay.
See all our
beyond neutral is something that you're covering. What is neutral in your mind right now, Pedro?
Well, that's a really interesting concept because neutral in the Fed's mind is 2.5 to 3, but neutral in the mind of many former policymakers that I talk to, who like pay more attention to the Taylor rule, is really like getting Fed funds above the current inflation rate. So the range is, extremely wide between 3.5 and 8, basically. But people really, if you talk to kind of hawkish former presidents like Jeff Lacker, they think that as inflation comes down and rates go up, they need to meet in the middle somewhere at around 5%, which is a lot higher, of course, than the market's currently pricing in. 5, maybe 5.5. So that's a lot. That's a lot more tightening.
How much of a burden is this on, say, for example, when money was cheap, the corporate bond market, LQD, they went out and they borrowed a lot for mainly financial engineering. They didn't go out and invest in plants and equipment or hiring people. They did stock buybacks and dividends. So I'm thinking about them. I'm thinking about the U.S. government that even though we have the printing press, it has to have some impact. This move in rates and just debt service has to be exploding.
Absolutely. One of my biggest fears, not on the government side, but on the corporate and sort of household side, I think that we're not, it's not quite clear how much leverage is in the system because the Fed monitors the traditional banking system, and this whole market boom happened outside of their purview, basically. Almost willingly so, because they chose not to regulate the shadow banking system post-financial crisis. And so we really don't know where these pockets of leverage are, to your point. So there is a big fear that as people unwind their positions, whatever they might be.
What did they mainly finance, the shadow banking system? What was it, who were they lending to and for what? Everything?
I don't really know. I think it was, it's people call it the everything bubble, right? But it was stocks, it was crypto, it was corporate bonds, it was, I think this is a very widespread asset increase. Actually, I had a really interesting conversation with Fannie Mae chief economist Doug Duncan last week. And he said that one of the things that we don't know about housing is, he didn't use the word bubble, but is how much of a monetary policy led price appreciation is built into the prices. So that's sort of like how he doesn't know how much prices are actually going to fall, because it's hard for him to tell how much of it was a demand element and how much of it was a bubble element.
Yeah.
So if that's the case in housing, look out below.
Yeah. So, because consensus is, despite higher rates, where people aren't going to leave. They couldn't get a better rate than they had the last several years. They can't live cheaper. A lot of them live cheaper than it would cost them to go out and rent. They're not going anywhere unless, the villain bank comes to repo it. So there's going to be a supply issue. Therefore, even though it may slow, we have a shortage of housing stock, so don't expect anything like 2008. And then you bring that up, and that would be the surprise, because
that would be the surprise, and it would have to be accompanied by a decent uptick in unemployment, which makes servicing the cost of even that sort of perfectly affordable house that you bought, suddenly prohibitive. That might, and then in that case, who knows what's going to be happening to the rental market if there's an actual decline, right? The rent versus own calculus might actually change in the deep recession. And so,
we enjoy hearing from you very much, Pedro, and really appreciate you taking a holiday to come in here. Anything you want to wrap it with?
That's basically it. I mean, my main thing is I have never I've never covered a Fed where you had a full basis point, a full percentage point rather, of possible outcomes at any given meeting. But it seems like we're basically there, right? For the next few meetings, it's 75 or 50, but we really don't know if they're around the corner from a pause or about to accelerate the pace of rate hikes. So I think that, you know, I don't envy traders in this environment. It's really hard to prep.
Yeah, I don't envy being Jerome Powell either. And
No,
maybe they'll
I
even
don't.
go to some surprise in between meeting action.
Exactly.
It seems like that's what the
definitely on the
ECB
table.
is doing. Lagarde keeps coming out between meetings with statements. Maybe that's a new way where, you know, maybe you could shock the market between meetings and really keep people on edge. Do you think you might do that?
I think it would take an acceleration of inflation from here, an unexpected acceleration, but I wouldn't rule it out. And I think he's not going to rule anything out either after ruling out 75 and then having to do it. I think he's learned his lesson there.
I remember when, you know, money supply reports on Friday afternoon were big, and at times the Fed would make a decision after that, and they ruined a couple weekends for me. So anyway,
the good old days.
Yeah. So Pedro, thank you so much. You know, we really appreciate your insights, and I learn from you every time I talk to you.
My pleasure. Same with you, Dale. Appreciate it.
All right. So I'll get a hold of you on Twitter, and we'll keep this thing rolling. All right.
Sounds good, my friend. Take care.
All right. Pedro DaCosta, everyone. You could follow him at P DaCosta on Twitter and go to MNI and you know, hit the different markets and go to the Fed, and you'll see what Pedro is thinking.
Also, if I could put a plug for my podcast, check out
do that.
Fed's.
Where do I find it?
You can, it's on marketnews.com, but with a delay, it's also on Spotify and iTunes and Google Podcasts, and it's called Fed Speak. So,
okay.
Everybody check it out and follow.
So if you'd rather listen than read. Okay,
exactly.
So follow Pedro on Twitter and follow his work, and you'll get some great insights into what's happening into an area that no one knows except maybe we'll start looking at the size of Powell's briefcase. Going to a meeting, right, buddy?
Absolutely. Or the color of his tie is the other guy.
We'll start looking at fashion. So thanks, Pedro. Have a great holiday, and appreciate you being with us.
Thanks very much. All the best, buddy.
All right, I'll be in touch.
Thank you.
Okay, everyone. So that's our holiday session here. How did we do today, guys, for the holiday? So we found things to talk about. Deja vu. Oh, okay, Laura, you're welcome. They will be doing the morning edge. So yeah, we got to hang out. Not much has changed, has it? Yeah. So anyway, this may be a good video for you to play over because there was a lot of macro thoughts in here. And we'll see everyone tomorrow. I don't know if we could call it Turnaround Tuesday. Maybe Wednesday's Turnaround Tuesday. All right. So that's a wrap, everyone. Don't just count your pips, count your blessings. Me and the best team on the net. We'll see you tomorrow in F.A.C.E and join so that you have the benefit of being surrounded by excellent traders that are willing to share and help. You're welcome, Tom. I'll see you guys. And Traders Funding Program, if you've gone through a drawdown, or even if you're trading great, check it out.